Welcome to this explainer. Okay, let's just dive right in because we really need to decode the UAE Federal Tax Authority's latest moves. We're talking about a subtle, but honestly, massive shift in their transfer pricing playbook. If you're operating in the UAE, you already know the tax landscape is shifting fast. But what's happening right now, just beneath the surface, it is literally changing the rules of engagement.
For months, a lot of businesses have been looking at transfer pricing through a pretty narrow lens, right? Kind of treating it as just a basic paperwork exercise, a box to check. But as you'll see here, the reality is a massive wake-up call. The FTA is thinking way bigger now. They're totally moving away from just collecting PDFs, and they are actively building out this really comprehensive big picture strategy. We've actually got two recent UAE tax developments to look at today. First, the release of the summary of FTA private clarifications, and second, the latest Emara tax corporate tax return requirements, specifically those dealing with downward transfer pricing adjustments. Now, on their own, yeah, they seem like incredibly boring administrative updates. But when you actually connect them together, well, they give us clues that tell a very, very consistent story about exactly where compliance is headed. Let's start with our first big clue, reporting adjustments. Historically, businesses have felt pretty safe hiding behind those familiar disclosure thresholds. Take the big one, the 40 million dirham mark for aggregate related party transactions. If you were operating below that number, the general vibe was, hey, we're safely flying under the radar. And then there was that secondary threshold, right? The 4 million dirham limit per specific transaction category. Teams relied on that heavily to sort of gauge their overall audit risk. For a really long time, these specific numbers completely dictated how much attention tax departments gave to their TP disclosures.
Well, here is the absolutely crucial point. If you need to make a downward transfer pricing adjustment in your current Emara tax return, those monetary thresholds we literally just talked about are completely thrown out the window. Poof, gone. They no longer matter at all. The current return format demands that you disclose these adjustments totally regardless of whether you hit that 40 million or 4 million dirham mark.
To put that into perspective, it means that even a tiny, seemingly totally insignificant adjustment is now explicitly visible to the authority. You absolutely cannot rely on your company's size to shield your tax return from scrutiny anymore. Honestly, this is a game changer for how transfer pricing risks bubble up during the filing process. The FDA is demanding a crystal clear line of sight into exactly why your taxable income is going down. Okay, moving on to our second clue, which actually comes from that newly published summary of private clarifications. And this one offers some real comfort for free zone entities. It spells out that a qualifying free zone person, a QFZP, doesn't just automatically lose its sweet 0% tax status simply because its initial related party transactions weren't perfectly recorded at arm's length in the financials. But, and this is a big but, the absolute vital condition here is transparency. Essentially, as long as you make the appropriate transfer pricing adjustments and clearly reflect them in the corporate tax return, that mistake alone isn't going to disqualify you from the 0% regime. For so many businesses in the UAE, this is a massive sigh of relief. Free zone groups finally get that much-needed certainty when they're trying to navigate those super complicated year-end true-ups. So let's zoom out to the bigger picture for a second. When we connect all these dots together, the message is loud and clear. The FTA is actually cool with you making corrections. In fact, they encourage it. They want your numbers to be right. However, they are demanding absolute, uncompromised transparency the second those corrections happen to lower your taxable income. They want to see the math, and they want to see the logic. No hiding.
And because of this hypervisibility, just having a TP document sitting forgotten on a server somewhere, yeah, that doesn't cut it anymore. You really have to ask yourself three highly specific questions right now. Number one, can you actually justify every single adjustment you're making? Number two, can you back it up with robust, totally defensible benchmarking? And number three, if push comes to shove, can your local file, your master file, and your raw financial data actually survive the scrutiny of a full-blown audit? Because as you can see, transfer pricing in the UAE is evolving incredibly fast. We're moving from a simple check-the-box compliance task into a highly sophisticated, data-driven risk assessment framework. The FTA isn't just archiving PDFs anymore. They're actively mining data points to figure out exactly which businesses pose the highest tax risks. So, what's the ultimate takeaway from all this? It's pretty straightforward.
Mere paperwork is totally out, and defensible implementation is the new strict requirement. It is no longer enough to just write down a nice-sounding transfer pricing policy. You have to actually execute it flawlessly in your accounting and be 100% ready to defend that execution to the FTA. Navigating a landscape like this requires a really fortified approach. As highlighted by Diraya Consulting Services, businesses have got to proactively strengthen their overall TP frameworks. Honestly, surviving this regulatory shift means doing the hard work, engaging in proper benchmarking, getting specialized tax advisory, keeping your documentation absolutely spotless, and leveraging technology to make sure every single piece of data aligns perfectly. Which brings us to one final, pretty urgent question for you to chew on regarding your own readiness. Think about the docs we just connected today. The complete removal of thresholds for downward adjustments, and this intense new demand for absolute transparency. Are we actually already entering a fully analytics-driven transfer pricing audit environment right here in the UAE? And if the FTA systems happen to flag your next return, is your data strong enough to defend your position? It is definitely time to take a hard look at your frameworks before the authority does it for you.